Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim, and this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next week. And hopefully, lots of good opportunities, ideas for you throughout the show. This has been a sleepy week in the markets, really, as investors wrap up their positions and traders essentially leave because there's nothing to do. So we've had markets really in a pretty narrow range. The S&P 500, NASDAQ, the Dow, Russell, all the indexes just fractionally up on the week. As ranges have been really narrow in all the markets. Focus has been on Dow 20,000. That had the traders pretty much mesmerized earlier in the week, and then as we get a little bit of a pullback, maybe the focus came off of it, but we think it will be back as we've had only this small pullback and maybe eyes off the Dow ticker just temporarily. The bond market, a bit of that reverse flow of funds that we were talking about, where a little bit of an uptick in the bond market, and I tell you small, maybe had a little bounce going there as money flowed back, a little backwash in that direction as the stock market basically just stalls. Dollar still a massive tower of strength, and we're expecting it to maybe just give up a tiny little bit more, but then another pop to a top is what we're really looking for in the dollar. Precious metals, they just eased a little bit lower in a very sick market. Also in a pretty narrow range. Take a look at those daily charts, a little triangle forming in there, and really sick. And you look at it versus a Bitcoin, thinking of cryptocurrencies as being in a panic on the upside, with the Bitcoin getting over $900 again. I mean, that had quite a volatile year. It's like 100% moves in there, up and down, 50% down, 100% up. So really big moves in Bitcoin. I don't trade them. I don't pay that much attention, but when they're starting to get attention in the news, then I take a little bit of a peek. Crude oil, not doing much. Again, also sideways. There was a surprise build in inventories on Wednesday that had them moving down a little bit. They would get a little bit of a downside reversal, so that killed that rally attempt, but overall really not much of a move in there, and a very slow holiday week. We're expecting the same thing in the markets as we move forward. Now investors, when they get out of the holiday week in the coming week, they're going to start to brace for the first 100 days, and things really change when we get into the first of the year. Somebody flips a switch, and things could get quite volatile, and we actually expect that as we think that implied volatilities are going to have a higher base. In other words, they'll get a jump up and just kind of hang around there in anticipating what could be some much bigger moves coming in all the markets. The question is, what will President-elect Donald Trump do or be able to pass in this first 100 days? Fear is that conservatives will push back pretty hard on a lot of things that have a picture of raising the debt by very much, because focus, the job of the conservatives is to reduce the role of government, to reduce that debt, and to really get the budget under control. Trump is already showing that he's focused on cost cutting as he brings together Boeing and Lockheed Martin in a competitive race to possibly have something instead of the F-35 program, which has been incredibly expensive. So Donald Trump is showing that his focus is on cost cutting, and that could get investors optimistic for another move in the stock market to the upside, which is actually what we think is going to happen. But when you think about what this first 100 days is going to look like, you can get a sense for why we think implied volatilities are going to go up and why we think there's going to be a lot of back and forth about disappointments and exuberance as far as what's happening moving forward. Think about this, and I'm just going to talk about a few things that are on the list for the first 100 days, and you can tell by the appointments to Donald Trump cabinet and support that he's got people in there that are ready to take action dealing with Obamacare, immigration policy, and really redoing that, building the wall, looking at trade and potentially tariffs, which could start trade wars, taking on China in that way. That could bring some massive volatility. Tax reform, and maybe getting rid of the IRS, which is just an incredibly horrible organization. Military spending, and looking at that and how to get a balance of proper spending in defense and deal with ISIS and take out those that are some of the most horrible terrorists on earth. Looking at the Supreme Court and that appointment for Scalia, which is coming up. Dealing with the debt ceiling, which is going to come up in this first 100 days, and our $20 trillion debt, and dealing with a budget and how to get that budget balanced, and Dodd-Frank, which is a huge encumbrance on the economy, and how to deal with that. President Obama's executive orders, which Donald Trump promised to just get rid of, like the first day he gets in there. The size of government and all of these departments that are unnecessary on the side of the federal government that could really belong in the states. How about term limits and dealing with job growth and inner city issues in their Common Core, which is supposed to be dealt with immediately, and the law enforcement issues that we have in this country with definitely police that do at times exhibit excessive power, and at the same time that do protect people in the inner cities. So finding that balance in there, and there's so many other things in there, this huge balancing act between gay rights and women's rights, and the Native American rights, and at the same time religious rights and the First Amendment. So that's just in the first 100 days, and I didn't name it all. Tried not to give too many of my own opinions in there, but basically, this is what the markets are going to be looking at. And if I tell you that I believe implied volatilities are going up, it's because of this. There is just an incredibly large amount to deal with. And if you thought stuff was going on before the election, wait till you see what it looks like after inauguration as we get into these first 100 days. I think that first 100 days is going to see a very volatile stock market, and I think that you could see implied volatility go ballistic. At the same time, I think that, this, 11 VIX that we're looking at right now, implied volatilities, I think that that's going to go away, and that we're going to have a new base. Maybe the base is 15, or maybe the base is 18. But I think that we're going to see a very, very different market picture as we move into the beginning of the year. So that's just a few comments that I had right there for this holiday week going forward, and what looks like the first 100 days. Let's take a look at our 60-minute chart of the S&P 500 and just take a peek at what happened in the last week. So you can see and hear what happened is that Monday was kind of a choppy day in there, as we had the S&P 500, the ES, look at those kind of big swings, except it was a very narrow range for the week. In fact, from the high to the low was only some 16 points, so that's not very much. So all of these chops are in a very narrow week. So this choppy day on Monday comes, bonds get a point jump on the upside finally. Yellen, she talks to grads and talks about this is the best job market for them that we've had in a decade. I think she's forgetting about the massive debt that they have to take on, and that the huge amount of people that have trouble finding jobs when they get out of school. So I wonder what world she looks at sometimes when she's saying that. Comes Tuesday, Bank of Japan Japan holds everything at minus 1/10%. The yen falls, the dollar screams, bonds and gold move to the downside, and that big upside move starts focusing on this fixation of Dow 20,000, as you can see right there. On Wednesday, world markets nearly mixed. Italy, they raised 20 billion euros to save their banks. That's not enough. In fact, they probably need much more. And more news came later on in the week about that. Oil was up, but then falls off on a build. And the VIX falls to 1092 on some massive complacency, and some late selling comes in right over here as we get some mild correction in the market. Thursday, well, the China was really weak as the yuan falls. The U.S. GDP revised up to 3.5%. Bonds got sold on that, but then were able to bounce back. Stocks, they moved down in here, but then they got a move back up right there. Oil got a little pop back up on some talk about stronger demand coming forward. And U.S. stocks, modest pullback, modest bounce, and not a lot in there. Friday, incredibly slow holiday market as we get here to the last hour of the day as we do this show. Really incredibly slow and not a lot going on. The news was a lot bigger than the movement, certainly in the market. China was weak again. New home sales strong. Consumer sentiment really strong. That's that. Bitcoin moving over 900 as it appears that cryptocurrencies are better than gold. And Monte dei Paschi nationalized by Italy, a 500-year-old bank. What do you think about that? So that just shows you that the 20 billion they raised was not quite enough, and the government takes it over, and that it didn't even give a massive move to the euro currency, maybe just a tiny little upward blip. Let's take a look at the calendar for the coming week, as you see right in here, and you can see that as we get ready for our best and worst for the week, that this is a week that is basically a non-event. What we're looking at in here is the no earnings reports in our universe of stock whatsoever. As you could see, absolutely nothing before and after the close. If there's any event that can move a market, the consumer confidence can move the bond market, but that's really it. There's not a lot more going on in there at all as we look at this calendar. And don't forget, Monday is closed. So a 4-day and likely to be very, very slow holiday week in there. So that is a look at our calendar. All right, so now we're going to just jump forward and look at our best and worst stocks for the week in page 2 for us. So basically what we do in this section is we look at the stocks that had big gains, and if there's anything in there that look like they're extremely positive, we bring them. And if we look at the stocks that had big losses, and we try to bring you the technical analysis in both cases on why it happened, what the news was, and what it really means going forward. So not only are we looking at what happened in the last week, but we're looking at what is likely to happen moving forward as we look at these stocks. And the first one we're going to look at in here is a stock that is a giant mover. We looked at this stock, Micron, throughout the year and continually saw some pretty good upside pattern forming in there as momentum continued to be really strong. They had really good earnings, really good revenues. Analysts all over this one moving it to the moving their targets on the upside, and this has been one great looking pattern in here. What was really interesting was that way back over here in July, we made a point that this corrective phase right in there was not even bringing any real declines whatsoever, and that was a very bullish scenario. I mean, basically, this was where the cycle looked. No real dip in here, continues up, this little minor dip right in that cycle, and then continues to the upside. So it makes the major 50%. This is an area we're expecting a minor pullback. Man, if you get to buy this on the intermediate 23 right there, that's at about $22, I would be absolutely thrilled. We're looking for early in the year just a little bit of a pullback in there, but this could be one of the giant movers. Consider NVIDIA, what that one did when it really got things right. This one is really getting things right, and it looks great. Let's take a look here at what happened here in momentum when it turned up, and just absolutely beautiful patterns that we're looking at in here. As this correction here only brought you down into the minor support, you could see the diamond consolidation in there and the breakout on this cycle, and then right in here the triangular formation, and then this big upside gap on earnings. That's where the bar is, way up there, and that is what a beautiful chart pattern looks like as we go back to this powerhouse on this weekly chart. Take a look at Navistar, NAV, on the upside. Look at that. You could see the downtrends we put in there. You could see the uptrends. You could see the upside cyclical action. Navistar, it used to be in the farm equipment, heavy equipment area, but they sold that off a lot of years ago. Note when they did a really bad job in their gas engines and got into a lot of trouble. You were in the stair-step downward move. You could see the cycle rhythms in there, and then you could see the improvement in here, and analysts starting to believe they're turning their economy or this company around. A minor dip right in here, and now you could see our projection right in here. We think it's going to 36 or higher. Now that's not very far. It's 31.5 right now, but that's the way this pattern shapes up in a stock that is much improved in there. Analysts really turning bullish on here, and this stock went from a big loss to a projection of some pretty good profits in the coming years, and that's why they're buying it. They're getting ahead of it. Speaking of NVIDIA, analysts still raising in here. NVDA is NVIDIA, and you can see, look at this stock. It is a triple for the year as analysts raise again in there, and look at this movement in here. It's been incredible. This is when we talked about Micron and that upside improvement and the lack of being able to decline in corrective periods. You could see these small little cycles right in here, those three making up a bigger one in here, and then again these small little cycles in here, maybe get a little dip and then up again. We talked about Micron. That's a similar pattern. This is the kind of the runaway, and we wouldn't be surprised if at some point this gets a rest in the coming year, but analysts love it, and they're just piling on this one. U.S. Steel gets a big gain for the week, where Micron was up 14%, Navistar 8%, and NVIDIA up about 8% for the week. Same thing for U.S. Steel. It's up 8% on the week, and flat here on Friday. We're actually thinking that this stock gets a pullback. So we think it's been excessive, that it's overpriced, and we talked about the steel stocks in our Thursday segment when we discussed stocks that could essentially have pullbacks pretty soon, so you might want to watch that segment. The look in here is that sometime in here it's going to fail off of this major 76 and get some kind of a correction there. So up 8% on the week, and that's not something that we would be buying up here as we're looking for a pullback. Yelp gets a gain of 5% on the week, and I wanted to put this one up so you could see Yelp, that we have not believed it when it was trading up and did that evening star. Our first target was right here. We put those in. It came and just touched it perfectly, and then got a bounce. So I want you to see the cyclic action. Look at this cyclic action right in here. You can see that barely giving up ground. Really bullish when it does that. Gets another big move, gives up a lot of ground in here, then has the next move and looking like it's going to come down in here. So we think this move is some crazy exuberance, just based on the fact that analysts finally think that they're getting it right. MKM comes out and says this is their top small to mid cap stock for 2017, and I say to that, I doubt it. and really think that this is going to be an issue for the stock. Now, it's in a diamond, forming a diamond consolidation. You could see in here, let me just get this diamond formed for you, right in here. So that's that part of the diamond. What a diamond is two triangles essentially. So there's one triangle right there. Here's the other triangle right in here, and you can see this little trend in here. That's going to be key. The question is how it finishes that, and then how it moves up. I don't think this stock is going to be one of the best for the year next year, I'll tell you the truth, because I don't think that they're getting it right, and I don't think they have figured out how to monetize that model. So those are the stocks that have done the best in this very, very quiet week. And now let's talk about the stocks that have done the worst. The stocks that have done really badly in this week were in, again, the retail category. Now, we have been all over this Sears Kmart, SHLD, saying there was no way they were going to get it right. Their burn was just too high. The same thing for JCPenney, which we have been saying that we think is going to go out of business. That SHLD has been in a continued deterioration. When it was in the 20s, we thought it was going to the sub-10 single digits, and it makes it there. So this week down 13% on the week in SHLD, and a very, very negative cyclic action that we're looking at right here. As you could see, SHLD in this year and a half or 2-year downtrend that we're looking at right here. And definitely you could see, no doubt about it, right? So let's just look at these last cycles, rally and sell-off. This is 2 years ago. Now follow me in here, rally and sell-off, a very feeble rally and sell-off, an attempted rally right in here and sell-off, and the rally and sell-off. And this points to February. I think the stock could be $6 in February, honestly, as it makes a low of $8.71 this week and continues on the downtrend. I'm going to keep talking about retails right now because while we said that Sears is in severe trouble, we have continued to show other stocks that have been in bad trouble. BBBY, a bad week as they come out with earnings. Now this one has our colored phasing in there. Let's get a little closer look, and you can see in here that what we believe is that this low is in place right over here very clearly. This rally came as expected right in here, and you can see these rally phases, and now we're in this downward phase right there, and that goes out until March. So Bed Bath & Beyond, we don't think has got a lot of hope in here. As a matter of fact, we would sell any attempted rally. This is a big engulfing pattern right there on the daily chart, and that gave you the top. It broke down, and the slim ribbon lost its upside momentum on that big downside earnings gap, and continues on the downside as downward momentum takes over. We think that this will be a downside stock for about the next 3 months. A bad looking pattern in a BBBY. You could see a yellow zone will turn red if it gets under 38.6. So bad looking chart. ANF, which we have hated, down 10% on the week. We're getting into this period in the early week of January. We think that that will be the low in there. Down 10% is still another 10%, let's put it that way, is ugly. We have continued to talk about that one. American Eagle Outfitter in the same category. Down 7% on the week in another one of the teen retailers that continues to be in trouble. Dollar Tree down 6% on the week. Gap Stores in the teen retailers down 6% on the week. And Best Buy, a stock that we have loved, now giving a little head and shoulders top in there. We think it's going to fall to around 43, which would be around our buy area for there in Best Buy. That one we would call it as executing pretty well. Interesting, when you look at these retailers, I was in Macy's shopping for the holidays a couple days ago. I mean, the place was packed. You were standing in line to pay for stuff. But the prices, it's unbelievable. Stuff is on sale, and added to that, extra money off. So what the retailers are having to do in order to compete with the online competition from Amazon, I got stuff coming from Amazon every day, it seems. I mean, that has been just murderous for these stores, and essentially retail, they're choking on their own brick and mortar. So I don't think there's any respite for them in the coming year. You'll get bounces, they won't last, and trouble in Retailville, I think, is going to remain. And they're going to have to figure out how to compete in this online world. So a couple other stocks just to mention, both down 11%. The first one we're going to look at is RHT, which is Red Hat in the cloud category. And you can see right in here that it is in a declining phase. Now, this decline came late. So, in other words, this rally right in here and this sell-off is what we're looking at right there. Here's your rally, and here's your sell-off. And that came really late. What that means is that it maybe has another week to go, and then it gets into a bounce. So if it had that bounce as we expected, we would be looking to short it in this area. Now that's probably a month or two away in that bounce, but I want you to see as you look here at the momentum shift, as this was a good stock in here and now the momentum is lost. It gets a bounce right now, and maybe it gets back up to that 74, 75 area in these coming weeks, but these big downside gaps are really trouble. And actually big upside gaps sometimes are trouble too. If you go and look at our earnings gap video in our list of videos in Style, Strategy, and Plan, then you will see that it is often when you get these big moves, it's the start of something or the end of something. So right now we think that big downside gap is the end of a correction, and that it gets kind of a move in here to a bounce, but I think that is going to be a sale as their earnings miss by a big amount, and analysts are all over this one on the downside. The last one we're going to look at in here is Twitter, TWTR. As you can see in here, this has just melted down. We showed this downside trend, this projection in here to go out into mid-January to late January. That's still the case. We see 2017 as potentially, we'll call it the year of the Twitter take under. I think someone's going to buy this stock up for a lot lower price than anybody anticipates. Maybe the stock falls to 10 or 12 and then somebody takes it at 13 or 14. And that's how the stock gets gobbled up by somebody that wants, these 300 and something million users. But overall, this pattern has been bad and continues to move to the downside. Down 11% for the week, and so much for one of Slim's best 12 for 2016. This one did not work, even though it had some big gains at some point. Well, modest gains at some point during the year. Overall, it's been down most of the year, so not a great call by me. And there were a lot of good calls, however, and you will be able to see some of my calls for the coming year and how I did in the last year in the Market Week special show coming in the next week. So now what we do is move into our short-term view for the coming week for the stock market and take a look at what we said in the last week for the S&P 500. We had anticipated that the S&P 500 would have a bit of a pullback. Now, it had a bit of a pullback, but again, as this has been an incredibly slow week, the moves have been far more shallow than we expected. While we expected it to get down to about 2239 in the S&P 500 and then have another move to the upside, it actually moved down, but didn't move down near as far. We pretty much got the shape of what we thought was going to happen right, but forget about getting any kind of depth of decline because the sellers just are not there. Here's the S&P 500, as you can see right there, and note the bull flag that's formed in there. So you can see in here that the way these patterns operate is that you have these cyclical patterns right in here is what our main focus is right now, made up of smaller patterns. So if you look at the smaller pattern, this high was like the eighth day, so that made that the ninth day. Generally, these are running about 9 days. We thought we would get a little more extension on the upside and then move down and move to about 2239 right over here. Well, you could see the dip didn't come that far, and we're running out of time. When that happens, and you get this triangular formation right in here, what it means is that the downward corrective pressure, that's this right in here, is meeting this big upward pressure right in here and not able to go down very much. So your downward correction comes down, it pushes it down, your big upward correction comes right in here, then this runs out of time and the next thing is up. And that's why we have that upward projection right in there. So what do we think? Maybe another day potentially on the downside in here is small. Maybe getting to the slim ribbon right around 2253 right here. The middle of that is the blue line on the 13-day moving average. But then we think it's going to go up, and our upside target for the stock market now is at around where it's been, 2290 to 2300. We're not exactly sure if it's going to happen in this slow coming week, holiday week that's coming up, or if it's going to happen in the coming week following that. Like we say, we think there's a lot of volatility coming in the market in the next week, in the first week or the first month, and in the first 100 days of Donald Trump, which go right through April. So we think there's going to be some big moves in there, upside and downside, and watch that implied volatility because we think it's going to grow. And that is our show for the week. Man, here we are at the end of the show. First of all, I want to thank all the people for writing us and wishing us all the great Happy New Year's and good holidays, and really thankful to that. Thankful to you all for all of your great support. Get an email from Costas from Greece and from Sultan in Saudi Arabia. And yeah, we're international. I mean, there's people that watch us all over the world, and we're just so honored that you all think so much of us. So that is the show for the week. Wishing you a great Christmas holiday, good long weekend off. Be safe out there because it is crazy out there. And we're wishing you great trading.
Well, I'm